What's up, y'all? It's the Dr. Investor back again with another video. Welcome back to my channel where we talk about real estate investing, personal finance, personal growth, and entrepreneurship. Today I have a really great video for you guys. I'm going to tell you the most common reason that people get denied for mortgages. I know it's a new year, so everyone's so excited. Maybe on the resolution list is buying a home or buying an investment property. It's very important. You may think you're in a stable financial position and think you're ready to buy a rental property, but ultimately it's the bank and that loan officer that will determine if you're ready to buy this home or rental property. So I'm gonna go over some of the ways you could become a bankable individual and not get denied for loans. And I will also explain the most common reason that people are getting denied for their home loans and mortgages. We were recently in a very tough economic environment. So typically when the economy is not doing great, banks tend to pull back and make their lending criteria much more tight than they do when the economy is going really great. So last year, inflation was really high. That was one of the main drivers. Banks made it pretty hard for individuals to get mortgages, as well as there were very high interest rates, so a lot of people could not afford to even get mortgages. I'll give you guys a little backstory about myself. So I read Rich Dad Poor Dad around 2017, 2018, and I was super stoked to get in the real estate game. I read every real estate book I can find up until then. Within a couple months, I found me an agent and started going to home showings. And my agent even connected me with lenders. They were telling me a whole bunch of great things like, oh, no problem, we'll get you a loan. But when I found the investment property that I wanted to buy and it was time to make an offer and the lender had to provide a pre-approval, they told me, hold on, slow down. You are not ready to buy a home. You have been denied for even a basic pre-approval. You will not be buying any properties today. After I heard this, I was devastated. But one of the key lessons I learned from this told me why I got denied for this pre-approval. And from then on, I make sure I will never be denied again. Let me lay the foundation for you guys. So typically when you're shopping for homes, you're paired with a lender you really like. And you may go with the bank you typically bank with for your normal checking and savings. And the real estate agent you're working with can also connect you with lenders. And the loan officer you're dealing with at these respective financial institutions, prelim evaluation of your bankability, let's say, of the likelihood that you'll be able to afford a home and how much you can afford. And through this, they will give you a pre-approval letter of what they believe you can afford based on their prelim analysis of your finances, your credit, your debt, your income. And you'll be able to provide this pre-approval letter to sellers of the homes that you're interested in, and it lets them know that this person's already connected with a lender, and this lender said that they'll likely be able to afford this amount of home. So this is their maximum budget, and my home falls within that budget. So I may want to accept this offer because I know this person can come up with the money to afford this home. So ultimately, after an offer is accepted, your loan will go into underwriting. This is when your loan officer does a deep dive into your financials. They'll go into all your outstanding credit, your income. They'll ask for W-2s, pay stubs, letter from your employment. They're going to all your debts. This is ultimately going to determine if the loan is going to go through or not based on this deep dive analysis of your finances. Even though the lender did a pre-approval letter, which is a prelim evaluation of your finances, it's not until your loan passes underwriting and goes into settlement that you are actually fully approved for that loan. So without further ado, let me get into the most common reasons individuals are denied for their home loans. The first common issue I'm going to talk about are credit issues and individuals having credit scores that are too low. So credit is typically a way that lenders use to evaluate how responsible you are as a lender. If you have a credit score that is within their credit guidelines, if you are misusing your credit, or if they deem you not to be worthy credit-wise because you do not use credit responsibly, they can flat out deny you for a loan. And many lenders have credit thresholds you must meet in order to be approved for a loan. So typically 620 is the minimum amount of credit you need to be approved for a conventional loan. 620 is on the lower end, but I would consider that the minimum of what a bank will accept. And if you want to get the lowest interest rate, which is correlated with your credit score, it is important to have a very stable high credit score. When you have a credit 760 or above, typically get the lowest interest rate that a bank has to offer. Knowing this, that almost all lenders look into credit when they evaluate you to see if you will be approved for this home loan, it's important to talk with that loan officer to know what the credit thresholds are to be approved for a loan at the price point you're looking for. You can be proactive knowing this. You can pull your own credit score in your own credit report. And if your credit report or credit score is not within the guidelines and thresholds that they laid out for themselves, this will tell you need to make improvements to your credit score and your credit history. For most individuals, it'll take a couple months to repair their credit. If you cannot wait that couple months, this may be a sign that you may have to look into co-signing with an individual who has stable credit. Say if you're buying the home with a partner, you can have this partner be a co-signing for the loan. That way, this increases your chances of being approved for this loan. Another common reason individuals are denied for home loans is because their debt to income ratio is too high. So your debt to income ratio is an analysis that your loan officer will do to determine how much debt you have compared to the amount of income you're making. So most conventional loan programs want to see debt to income ratios that are below 40%. It's hard to make more money, but one thing you can do is lower your debt. The next common reason individuals are denied home loans is because they provide information to the loan officer that cannot be verified. A common thing that you'll see is individuals receive large amounts of cash right before they have to close on the property. It's always a great thing to have cash in your bank account when you're buying a home. But when that cash comes a few weeks before closing without a clear explanation of where that cash came from, this raises eyebrows to the lender. They may think you may have received a gift from somebody, and this may not represent your true financials. This is not money you're used to receiving, and it's not an accurate picture of your financial credibility to the lender. So they may deny you flat out just because of that. The underwriter is going to be very diligent when doing their due diligence on you to see if you're bankable for them to approve the loan for you. These loans are hundreds of thousands of dollars. So these banks are going to make sure all the information that you give to them is verified and correct. And if they cannot verify this information, this may be a reason for them to deny you of this home loan. Another common reason that individuals are denied home loans is because they do not have a stable employment history. The bank wants to make sure you'll have enough money to pay that mortgage every month. And one of the ways they have a higher likelihood of guaranteeing this is if someone has stable employment. So if you're jumping from job to job every year, this is concerning to them, even if you do have a good job. because that tells them that the job that you're in now may not be around next year. The income that you're getting may not be around next year to pay your mortgage. So they like individuals with stable income. And they like individuals that are receiving enough income where they'll be able to pay off that mortgage comfortably, as well as have reserves in the bank in case something should happen to this property. They have a whole bunch of calculations they do to assess your bankability. So the banks do like individuals with stable employment history. They will ask for at least 2 years of your past tax returns in order for you to pass underwriting. And it's important that these be stable tax returns and that you're actually paying taxes. There's many individuals that have creative financing. Their business may generate a high amount of revenue, but ultimately their net income is very low, and the bank is going to lend you based on your net income. They don't care how much revenue you're making. They care how much that net is, because based on your tax returns, that's how much money you're bringing in. And if you're not filing taxes, to them, it's as good as making no money. It doesn't matter how much cash you have in the bank. If you're not filing tax returns, that money is good as never happened. That's why it's very hard for people who are self-employed to get approved for loans, because banks are even more strict with these individuals, because self-employment is correlated with having unstable income in the bank's mind. Another common reason individuals are denied home loans is because they recently applied for other lines of credit. It's very important, if you plan on purchasing a home, to lay off on applying to any lines of credit, especially before you pass the settlement period and your loan is closed, or even shortly beforehand, because you applying to credit tells the bank that you don't have enough funds on hand and you're looking for additional lines of credit to afford the things you need to afford, possibly the down payment. And banks do not like this. So it's very important to try to stay away from applying to new lines of credit when you want to purchase a home. Another common reason is, which we saw a lot, 2021, 2022 period, when home prices were just on a steady increase. In 2021, 2022, many homes were going under bidding wars because you had a lot of accumulation of things. You had very low interest rates. You had a lot of hedge funds trying to buy homes. You had a lot of individuals who wanted to buy homes as well for themselves, and a lot of investors who wanted to buy homes. So all of these things together led to home prices going up very quickly, and there was a low supply of homes. So the homes that were available, everybody was fighting for them. And if there's a low supply of anything and demand is high, you know what that's going to do? That's going to raise prices. And we saw this in 2021, 2022. We saw this in 2001, 2022 on people making multiple offers on homes, and people bidding tens of thousands over. People bidding $100,000 over asking price. People bidding $200,000 over asking price with escalation clauses, just to make sure that offer is accepted. When the offer is accepted, before you close on the house, there has to be an appraisal of the house. And if this appraisal is lower than the price you actually sold the home for, that's when you can get into trouble, because the bank is only going to lend you based on the appraised price. So to make up for this difference, either you can come up with the extra money out of your pocket, or you can negotiate with the seller. Tell them, like, my bank is only going to lend me X amount of dollars for this home. Even though I said I'll pay X amount of dollars, this is what the bank will loan me. So can we negotiate to get down to this appraisal price in order for us to close on the home? And the seller can based on this, the seller can reject your offer and go back into the market, which is which many sellers do not want to do, or they can take the price cut and take the hit and just accept a lower price than they were expecting. Many lenders are different. Many lenders have different criteria that they deem important for approving an individual for a loan. So I would highly recommend you shop around for lenders when you are purchasing a home or a rental property, because you'll see different lenders give you different interest rates. Different lenders give you different pre-approval prices. It's important you shop around in the loan market when you are purchasing a home. And if you're shopping around in a close amount of time, you will only receive one hit to your credit score. So if that's something you're worried about, do not be worried, because you're not going to receive a hit for each lender you go to. You'll receive one hit for if you're shopping around in a short time frame. Because this tells the credit bureaus that you are shopping for a home and you are looking to see who has the best terms and best pricing. That's a wrap for this video on the most common reasons that individuals are rejected for home loans. So if you like this video, you know what to do. Make sure you like, subscribe, and leave a comment. I'll be right back with a fire video before you know. If you're watching this, just know I have 1,000 subscribers. Thank you for all the love and support you guys have been showing me. I really appreciate it. It was just 10 months ago that I started this page, and just your support has kept me going. I plan to keep on building. And if you know anybody that will benefit from my content, make sure you tell a friend to tell a friend to tell their best friend to subscribe to my channel. The Dr. Investor is out.